Thank you, Eric. Our next company today is Vizsla Silver. We have Michael Pettingell. He's the VP of Business Development. He's also a geologist with 10 years experience in the industry. Vizsla, who I know quite well, is developing the massive Panuco project in Mexico. So welcome to the stage, Michael.
Hello, everyone. Well, it's a good presentation, good timing. Our property here, our flagship, Panuco, is just north of GR Silver's asset. So again, my name's Mike Pettingell, VP Business Development and Strategy. Vizsla Silver is a junior exploration and developer focused on their flagship Panuco asset located in Sinaloa, Mexico. I'm going to be making some forward-looking statements. Feel free to go back and read this at your leisure. And I won't take too much time on this slide. Everybody in here should know why silver, why gold. Really, for silver, it's the electrification of the planet. And silver's got many properties similar to gold, but more cost-effective that can really support in this green energy push. So Vizsla Silver, as a company, we do have an emerging discovery, one of the highest grades globally, and it's a silver primary discovery located in Mexico. We've got a great management team and board with over 185 years combined experience in virtually all assets or all facets of the mining industry. We do have multiple avenues to re-rate. We put out our maiden resource in the first quarter of this year, and we're targeting an update for that maiden resource in Q4 of this year. We also have the optionality to expedite into a production scenario via the existing operating infrastructure, permitted and non-permitted, that exists in the district. And we're one of the most aggressive explorers out there, and certainly in Mexico. This year, we're doing a 120,000 meter plus program with 13 drill rigs. It's resource, expansionary, as well as discovery based. And that'll all feed into this resource update. And we're well financed. We have around 25 million, I know it says 30 here, 25 million cash, if it's Canadian dollars, in the bank, no debt, and we own the property 100% outright. Just a quick company snapshot here. We do have 149 million shares outstanding. There's some warrants out there, about 16 million, that are set to expire at the end of July. Those are not currently in the money, so it's a bit of a double-edged sword, but we're very cognizant of dilution. As Eric mentioned, skin in the game. Management holds around 16% of the outstanding shares of Vizsla Silver. So, we're very cognizant of any dilutionary, events. Again, 30 million or 25 million in the bank. We have analyst coverage. Consensus is sitting around $4.15. Today we're trading at around $1.80 Canadian, so that represents more than 100% upside from analyst consensus. A couple names to point out here. Recent hire was Jesus Velador. He's a PhD epithermal geologist. And he's our new VP of Exploration. He's credited with the Val de Cañas discovery, or supporting the Val de Cañas discovery at Juanicipio, which is Mag Silver and Fresnillo's joint project in Mexico. He discovered it with Peter McGaw on the Peñoles side of things. But he's had much experience in this whole area, this whole district. It's really his backyard. On the board side, our chairman is Craig Perry. Many of you might know him. He's quite an industry veteran. He's the current chairman of Skeena Resources. He's also a former CEO and founder of ISO Energy, NextGen Energy, and EMR Capital. Also spent about 10 years at Rio Tinto as a development geologist. Charles Funk, he's our technical director. He's really credited with the majority of discoveries made to date at Panuco. And he's also the CEO of Heliostar Metals, many of you might know. The last name here is Simon Smirlik. He's the current COO of Ausenco Engineering, 20 plus years in Latin America doing mine development, mine commissioning, plant commissioning, and in particular, Ausenco's building Silvercrest Las Chispas asset just up the road. So ESG is extremely important in the mining space, and it's extremely important to us. We believe in extreme ownership. That's one of the main factors, and that supports the community in many ways because we convey that to them, and they're able to then convey that to their families. Safety-wise, we just ticked over 600,000 man-hours without a lost time incident, and we're extremely proud of that. I've got a terrible pun. That doesn't happen by accident. It takes work, it takes commitment, and it takes extreme ownership. We have 6 ejidos that cover our district. 3 of those, or all 6 ejidos, have 25-year access and exploration agreements. And 3 ejidos, the ones that cover our resources, we have 30-year exploitation or operating agreements. So very good community relations. So at the project level, you could see here, it's quite a large district, 14 kilometers long by around 7 kilometers wide. We've put out our maiden resource here, focused in the western corner of the district. The property itself is about 45-minute drive from Mazatlan. It's a resort town with international airports. You can see there's 2 highways that bisect the property with high-tension power that also runs parallel. It's about an hour drive from Mazatlan. If you move further to the north, about 80 kilometers, you run into First Majestic's flagship San Dimas mine. That is probably the best analog from a geologic perspective to the Panuco asset. Again, we do have this excellent access with the roads, water, there's bridges. So going into a production scenario already has a lot of that is set in place. And we're advancing these high-grade discoveries of Napoleon and Tajitos. This resource comes after 18 months of drilling very rapidly, and it's a combined 106 million ounce resource base. And so this year, again, 13 drill rigs, 6 focused on resource expansion and category conversion, and 7 are focused on true exploration, testing new targets in this very large district. So this is an extremely boring slide. I apologize, but just to hammer it home here, we came out with 8 veins in our maiden resource, 13 total wireframes. Every single one of those wireframes is wide open. 57% of this maiden resource is classified as indicated, which you don't typically see off of a maiden resource, which speaks to the confidence that not only we have, but in moving it up to a next confidence category, into a measured or a reserve, you have the confidence there given this maiden resource at that percentage. 95% of this maiden resource is precious metals, although we are a polymetallic deposit. 95 is precious, and of that 95, around 52 would be silver. And we like to highlight that because we are a true silver primary story. And this number here, this is a great institutional number, but to date we'd spent around 25 million US in exploration. Based on this combined resource of 106 million ounces silver equivalent, that yields us a 23-cent per ounce discovery cost. And if you were to look at every single dollar spent since inception of the company, that covers paying property vendors, issuing shares, it's around 98 million. So that would net you a 92-cent per ounce discovery cost. So very, very capital efficient drilling here at Panuco. And the last thing we highlight is the cutoff grade. And cutoff grade is really determining what's ore, economic, versus what is waste. We put 150 gram per ton silver equivalent cutoff grade to state our maiden resource. But when you look at going into a mining scenario, you have to pick a mining method. You've got to factor in dilution based on that mining method and ultimately your development costs to get to that mineralization. So we point people to the 250 gram per ton cutoff, because your cutoff will have to rise as you go into a feasibility or reserve scenario. So you can see here at the 150, we stack up very well to our peers. These are Latin American focused, primarily underground and primarily silver. And so from a size point of view, we're smack dab in the middle. None of these other groups have maiden resources. We're the only maiden resource here. And you can see by grade, we're second only to Silvercrest Las Chispas, which is a bit of a unicorn in the space. But at the 250, we have limited metal loss. We go down to a combined 80 million ounces silver equivalent, but we have a 42% increase to grade. Our grade goes up to 515 grams per ton silver equivalent. So obviously having higher grades near term, you can push forward that push forward the revenue earlier in the mine life, and it will drive economics. So not only do we stack up well against this peer group, but a lot of the majors that could be potential acquirers, we could add accretive value very, very quickly, given the limited development pipelines in the space. So again, this year, 120,000 meters drilling, going to feed into a resource update in Q4. Where is it going to come from? So here at Napoleon, this hosts about 50% of our maiden resource. We have depth potential, as well as a long strike and down plunge to the south. At the depth potential, these systems in Mexico, on average, go between 600 and 800 meters depth from the top of the mineralized horizon to the base. Deepest point in Napoleon here is just over 400 meters. That gives us that 50% to 100% runway at depth. But we're more focused on the strike and plunge potential, which has been really supported by this model here. And this is where we could sit in the epithermal profile. Imagine this is stacked horizontally as it would be in nature, and then has been subsequently tilted. You'll have a gold-rich zone that's more shallow, followed by a precious metals-rich core. And then subsequently, as you get deeper, you'll have an uptick in base metals. So that for us would be to the north, and we're staying away from that currently because we want to chase this precious metals-rich core. And that area that you see right below the word gold and gold-rich, that's exactly where we're focused on. As we incrementally expand and step down plunge to the south, we're hitting increased grades and increased widths in this area. This is just a nice slide showing the progression over the last 16 months of Napoleon. But the real takeaway is here is the orientation. This is a true panel of mineralization. And the reason why that's important is from a mining point of view, this lends itself to having many open faces that can be mined simultaneously. That in turn could feed a higher scope milling facility. We have a 500 ton per day facility on site currently that we own. As you can see by this slide, we envisage a much higher scoped processing facility at Panuco, somewhere on the order of 1,500 to 2,200 tons per day. Tajitos, this is the second area. It's about 500 meters to the east of Napoleon. It's a slight different orientation and a slight different chemistry. There's really no base metal component here, which there is obviously at Napoleon. So we still have that depth potential in the plunge runway. But what's really interesting about Tajitos is when you move to the north and you go up section, and that's that green blob, the lower grade green blob to the right side of the section there, the grade drops off and the vein completely pinches out. But that happens right at a cross structure that has actually been mineralized post-fault. And into the hanging wall, we discovered the Copala vein. And the Copala vein is really the low-hanging fruit for us. You can see here that it's a near flat-lying structure that is different than our subvertical structures as Napoleon and Tajitos are. And it's relatively, much thicker than Tajitos and Napoleon. Tajitos, the resource is averaging around 3 meters thickness, while Napoleon's around 3.5. We've got intersections here at Copala that are over 82 meters true width, containing subintervals that are 3 meters at 3 kilos. So very, very juicy rock here. 8 holes went into the maiden resource from Copala, all above 200-meter depth. It contributed 24 million ounces. So that's almost a quarter of our maiden resource base came off of 8 holes at this one Copala area. So we have 3 drill rigs positioned right here, right now, and we look to expand it to the north and south along strike, as well as step back to the east, where you can see this cross-section on the right side of your screen here, stepping back, trying to find the source of this mineralization. It is a big district, as mentioned. 28% of the known targets have been tested. The resource sits on 5% of the known sampled vein strike that we've identified to date. So of the 13 rigs, we'll have 10 rigs positioned in this western area, again doing resource expansion and identifying new targets or testing new targets. We'll have 2 rigs in the central area, as well as following up on those minor resource areas that we have there, and 1 rig roving around the eastern district or eastern area of the district, testing high priority targets. This is just a slide of the recent press release we put out for the north. One of the main theses we had in coming to this past producing district, which really it dates back to the conquistadors from the 1500s, using historic workings to vector to new mineralization. And that's prime example of what we've done here at the Rosarito zone. Again, it hosts a minor component of the maiden resource, but we've just recently tagged into a perpendicular structure called Cuevillas. And I know there's lots of Mexican names here, so please bear with me. But this is a zone, again, that we're expanding incrementally ahead of this next resource update. We also have electromagnetics that have proven to be successful for us. We have a plan to fly the entire property with airborne mag and EM. We've had a bit of a snag getting the proper equipment into country because of COVID and supply chain issues, but we're still hopeful to fly that this quarter. So what we've done is we've put out this maiden resource, 106 million ounces combined basis. We've completed initial met at Napoleon. Fantastic early numbers, 93 silver, 90 gold. And we have 100% ownership of the district now. We're doing ongoing met at Tajitos. Should have those numbers in a few weeks, and then we'll look to do follow-up, more optimized study on both blending Tajitos and Napoleon. And as we get more information from Copala, we'll factor that in as well. In addition, we're doing all the background work for development, so getting the initial hydro and geotech and baseline studies underway. So again, this year, the real goal is the real catalyst is the discovery potential from our big drill program, which will then feed into an updated resource in Q4. At that point, we'll look to do an economic scoping study, likely in the first half of 2023. I've got more slides, but I know I'm out of time, so if anybody has any questions, I'm happy to answer them. I'll leave you with this beauty.